Three important items to pay attention to as it relates to the economy and the market. One, the passage of the big, beautiful bill. Second, the release of the jobs report on Friday. And third, updates as it relates to our tariff negotiations. So the big, beautiful bill was passed last week. There are several really relevant items to pay attention to. One, estate tax exemptions have moved up to $15 million per individual. So on average, that means a couple has $30 million in estate tax exemptions to utilize over their lifetime. We also saw SALT tax deductions increase from $10,000 up to $40,000. So that means people who are living in high tax states and also in states with high property taxes are probably going to see some relief. So we've seen a variety of tax cuts put into place. What this means is on average, if you're making more than $1 million, you're seeing your after-tax income rise by about 3%. We also saw for most Social Security tax beneficiaries or most Social Security beneficiaries, we've seen an elimination in income tax on those distributions. That's also a positive. So the net positive for the bill should be that there's increased consumer discretionary spending. Since our economy in the U.S. is highly dependent on consumer spending, it should be a positive for the economy. It remains to be seen what the longer term impact is going to be to the deficit. So the ceiling for the deficit has been increased by several $1 trillion. So definitely watch the dollar and see what the market and the global economy is telling us about our deficit and where we're moving. I mentioned the jobs report was released on Friday as well. You know, what's been remarkable is the economy has been incredibly resilient. So since the tariffs were announced back in April, the fear was you would see a lot of layoffs. We'd see inflation come through, and we really haven't seen those items materialize as of yet. It may be too early to see those, but so far we've seen remarkable resilience in the economy. And in fact, if you look at what the market is pricing in, the odds of recession have fallen from around 60% down to 30%. So it's part of the reason the market is obviously been acting as well as it has. Today, we did see the the Trump administration levy a 25% tariff against Japan and South Korea. So I do think that we're going to likely see increased volatility as a result of some of these tariff conversations. I've read several analyses. On average, if the tariff rates end up being around 28%, that should result in stagflation to the economy. If we end up being substantially lower than that, it would really become a neutral to possibly a slight positive. Right now, the market is averaging in about a 13.5% rate is what the market is assuming goes into place, which would not really be destructive on the economy. And if we end up lower than that, obviously we could see some positive flow through. Thank you very much.